Hello everyone, welcome to today's video with a preview of Netflix's Q4 earnings preview, which are due later in the week. I am Nikos Zabouras, your host, senior market specialist at FXCM. Before, however, we begin, please go ahead and read carefully the risk warning and the disclaimers. Once again, please read carefully through the warning and the risk disclaimers so we can begin with today's session. Okay, let's go ahead. So before we go to what we expect around and what will be drawing our attention around the upcoming earnings report, I think it's good to set the backdrop and sort of see what has happened during 2022. And obviously, Netflix had a very tough year, and this is probably an understatement. It had to face a series of external negative factors. For one thing, we had surging inflation worldwide and the United States as well. US CPI rose as high as 9.1% year over year in June, and the highest level in 41 years. Of course, this is negative for Netflix in the way that this means it's disposable income for a service that is not essential to anyone. And of course, amidst the flurry of other options and increasing competition, that is obviously a challenging environment. Of course, we also had the world going further away from the pandemic restrictions, which is also a headwind for Netflix and other companies such as Netflix, which were the poster childs of the pandemic era. Now, of course, as people go out more and more and we have no lockdowns, they face challenges. Now, in order, of course, to control the surging inflation that we talked about just before, central banks around the world and the Fed in particular responded with rate hikes and this aggressive tightening, and the Fed in particular has been on its most aggressive tightening cycle in at least 3 decades, with a series of historically large 75 basis points rate increases. This, of course, is a tough environment for a tough backdrop for the stock markets. It's detrimental to the stock market and the tech sector in particular. And of course, NASDAQ entered bear territory, deep bear territory in 2022. Now, given increasing competition, high inflation, tightened monetary conditions, the pandemic reopening and all those factors, these had as a result for Netflix to lose subscribers in the first quarter of 2022, and it was the first user loss since the third quarter of 2011. So definitely a very big development there. In the second quarter of 2022, it relinquished even more users, having lost more than 1 million subscribers during the first half of 2022. Now, this had as a result for Netflix to be knocked down from the top spot in terms of subscribers by rival Netflix after the Q2 results, and the gap actually widened after the Q3 reports. Disney Plus, Hulu, and ESPN combined had a total of 335.7 million users as of October 1 against around 223 million users by Netflix. So the king of the streaming arena lost its crown last year. These factors, of course, had an impact on the stock as well. NFLX.US plunged after the Q1 and Q2 results of last year, hitting the lowest levels since 2017 later on in June, and closed 2022 with a drop of more than 50%. And let's go over to the chart. You can see here NFLX.US. And what we see here with the black vertical lines is the dates of the last 4 earnings reports. So here on the left, we are exactly 1 year ago. Back then, the firm had said that it expected a small subscriber growth for Q1, and markets reacted negatively. Then in April, it actually reported its first loss that we discussed, the first reduction in user base, and markets once again reacted very poorly to these results. And later on, we had the lowest levels since 2017. Of course, things started to turn around after that, not only in terms of the stock performance, but also with other metrics and actions. So let's go ahead and talk about that. So we said that it was a bad year, but there was improvement during its second part. Netflix struck back with a return to subscriber growth in the third quarter. It added nearly 2.5 million users, more than enough to cover the losses of the first half, while co-CEO Reed Hastings stressed that the company is done with shrinking quarters during the relevant earnings call. Of course, these are the Q3 results, which were reported in October. Those poor results of the first half actually forced Netflix to rethink key aspects of its strategy, and most importantly, the inclusion of advertisements, which it had long resisted against what its major competitors, most of them, were doing. So it moved on and offered an ad-supported tier, and actually did that quite fast, I would say, and was able to undercut rival Disney in both timing and pricing. It launched in November, whereas Disney offering launched a month later in early December. And it was also priced in this cheaper ad-supported subscription plan. It was priced in the US at $6.99, a full dollar below the rival offering of Disney. And we also had the stock recovering. And let's go back to the daily chart. And we can see that after the mid-year lows, the stock has been posting a recovery. We can see here, and had a profitable second half. Of course, that wasn't enough to change the bad picture of 2022. And we can see that it now tries to reach 38% Fibonacci of the slump from the 2021 record highs to the 2022 multi-year lows. And that brings us to the upcoming Q4 2021 results. So let's go back to our presentation. And these results are due on Thursday, January 19, after US close. It's the first heavy tech company, let's say, to report, and the first of the FANGs, of course. Now, according to the company's own projections, revenues are forecast to hit 7.776 billion in the fourth quarter, which would mark roughly 1% growth year over year, but would be lower compared to the third quarter. It also expects its earnings per share at $0.36 US dollars, which is a significant decline on both yearly and quarterly basis. Now, on the most important part, the subscriber base, the company expects that this will rise to 227.59 million, which would constitute a robust addition of 4.5 million subscribers if it materializes, from the addition of 2.41 million in Q3, so almost double is the expectation. We need to note that the company has said that it will stop offering forward guidance around its user base, starting from the upcoming results, the ones we expect on Thursday, as we said. Now, other than that, we will be looking forward to any statistics or commentary around the recently introduced ad-supported subscription plan that we talked about, as well as its efforts to crack down on password sharing. Now, Netflix has been okay with password sharing, but it was one of the other initiatives that has been trying to put forward in order to combat this subscription loss. Also, another thing that I'm interested in is whether we will get any commentary, any ideas around if the company intends, wants, thinks about entering into the sports arena. Disney, of course, has ESPN Plus. Amazon also offer sports, Apple too, YouTube too. So this looks like a potential market that Netflix could tap into if it wanted to grow and expand further and also take a hit at its competitors. So that's definitely something we're watching, not only this time around, but in general from the streaming giant. Netflix was able to show quick reflexes after the abysmal first half of the year, but challenges still lay ahead. The company had focused for too long on strong content and catering to the need of its clients, but increasing competition has created a very difficult environment, and especially as legacy entertainment companies are making strides on the streaming arena, because companies such as Disney, for instance, have decades worth of content to put onto their platforms, and Disney, for example, owns two of the most important franchises of Hollywood, Star Wars and the Marvel Cinematic Universe. So it's definitely hard to compete against such content. And of course, the market, everyone essentially is entering into the market, wants a piece of it. So increasing competition along with high inflation and the broader high interest rates environment makes streaming a tough place to be. So Netflix has definitely showed promise and quick reaction to some of the problems it faced earlier on in 2022, but it's definitely still a tough place to be. So we'll be looking forward to the Q4 results, which are due on Thursday. That's it for me. Thank you for joining me.